Hello and welcome to Chart TV for Thursday the 17th of November 2005. Today we're going to take a quick scan of some major global markets. Right, we'll start with the Nikkei in Japan and we'll just take a look at a couple of key levels. We can see here that we have support at 14,000, support at 14,000, support at 14,000, and that has now become resistance at 14,000. I think if we switch to the weekly, we can see that we've actually cracked 14,000, and we're looking. The high here was on the weekly chart was over 14,400, 14,449 to be exact, and that is in a very healthy uptrend. We're above the 30, 50, and 20 period moving averages and the 200 period. We're moving away from the 200 period, and the MACD is heading up. That is very bullish indeed. Let's switch to the daily, see what's going on there. Okay, we've pulled back to the 50 period, taken off, pulled back to the 50 period and taken off, and we're staying above 30, 50 and 20 and 200 period moving averages, and MACD's quite strong at the moment. So, but the size of that up bar is very bullish indeed. Because you see the size of that up bar compared to other bars, very, very bullish. Let's take a closer look at this. Basically, if the market is going to pull back, first support is 14,400 and second support is 13,800. If it falls through that, I'd say that it might find support at 13,200 roughly, or 13,000. But the strength of this uptrend, I don't see it doing that for a while. So that's a very, very healthy uptrend. What concerns me a little is the speed at which this is moving. I'm a little alarmed at it. It looks like it's gone too far, too fast. And if we switch to the monthly, you'll see that it has some very serious resistance to break through to decisively break through the 14,000 level. You can see that 14,000 is a very key psychological level, as it's tested it so many times over the years in this market. So I'm quite astonished at how quickly it's busted through that, and now we can look to either consolidate around this level, or the next target I'd have on this market would be well, we got a resistance here at roughly 21,000, but more close to home we got a resistance level at 18,000, and then here just a high we're attacking now of around 14,500. So we're pretty much there. We're pretty much at 14,500. But I wouldn't be too surprised to see this market consolidate this move, then move higher in the short term. Let's take a look at. I've been following oil quite closely lately. This is the light crude contract in US dollars per barrel, and monthly chart is bullish. This uptrend is a little alarming. It looks like a sort of a blow-off move. It looks like this market has moved rather far, rather fast. Like this looks like a stage 2 sort of move. Let's take a closer look at this. Okay, we can see each time the market has, interestingly, this the pullback from this high to this low was about 27%. From this high to this high, the retracement or pullback was around 20%. And from this high to this current low is around, once again, 20%, 19-20%. We're still above the 20 period moving average. We can see that each time, this is a 50 period moving average, each time the market pulls back and retests that in this uptrend, it takes off, it pulled back, retested the 50 period moving average here and took off again, and it looks like we're getting very close to it once again. Price has crossed down through the 30 and 20 period moving averages, which is bullish, but we're about to retest the 50 period moving averages, so which is bearish. We're about to retest the 50 period moving average. which has acted as support quite often in the past. Interestingly, this coincides with the retest of previous resistance at around the $57 per barrel level, and as we know, old resistance act as new support. It retested the $57 level, US dollar level here twice, and then took off from there. So I wouldn't be too surprised to see it making support here. MACD is turning down and looks to be bottoming soon. It's looking to reach levels that it saw when it made the low in May, and it also saw this level in the January to February sort of low. So once again, I wouldn't be too surprised to see this market find support around the 57 to 56 US dollar per barrel level. Let's take a closer look at this market. Let's switch to the daily. This gives us a better indication of what's going on. The 30, 50 and 20 period moving averages are bearish. The market has crossed under. We can see that every time the market attacks the 20 period moving average and the 30 period, it gets knocked back. So the 20 and 30s are acting as quite solid resistance here. So in this medium short-term downtrend. But on the bullish case, we're just touching the 200 period moving average, which is usually a 200 period moving average acts as support. If it doesn't, then that would be a very bearish sign for this market. MACD is very weak at the moment, so I wouldn't be too surprised to see it bottoming soon. On the levels, let's take a look at the levels. We got a previous resistance here at around 58 US per barrel. We got previous resistance here at 50 US per barrel. That's quite a rock solid support. We also have previous resistance here at around 56 US dollars a barrel. We can see that it tested it here, so acted as resistance here, tested it here, tested it here. So it's quite solid resistance. Tested it here, pretty solid resistance. Then it became support here, became support here, tested it here. So it looks like a pretty solid psychological level. So I wouldn't be too surprised to see this market bottom around, make lows around the 56 US dollars per barrel level, which fits in nicely with the testing of the 200 period moving average. Interestingly, if you look at this most recent downtrend, it's the gradient of this downtrend has been, we can actually draw in some trend lines. We draw the downtrends from the highs. Oh, that's a pretty poorly drawn downtrend. But basically, as a rule, you draw your downtrends from the highs, you draw your uptrends from the lows, and we take at least two highs, two major highs. We can take that as to draw our downtrends from, and you can see that this market is actually channeling. It's sort of every time it touches. Not having much luck with these trend lines at the moment with this package. I might have to look at other packages. Anyway, you can see that it has this price has been trading within this channel. Every time it touches the upper trend line, it bounces and retests the bottom of the trend channel, and then rallies up, retests sort of like a pinball in a pinball game, being sort of bounced around between flippers, and it's sort of been bouncing around in this downtrending channel. Interestingly, this note the gradient of this downtrend, and the slope of it is a lot less sort of aggressive as these fast up moves here. And the reason for that were that these were price shocks created by hurricanes Rita and Katrina, and all the damage caused to production in the Gulf in the US there, and also strikes in Venezuela, and it was a general sort of supply shock while demand remained constant or growing. Also interesting to note in the long-term, when you look at the long-term fundamental picture of oil compared, which aligns nicely with the long-term uptrend on the monthly and weekly charts, for each with the industrialization of India and China, consumption is only growing, while at the moment supply is remaining constant or is in decline. So we're basically not we're not finding as much oil. We're not replacing the oil that we're drilling it, pumping out of the earth at the moment. So supply-demand fundamentals are quite compelling, and dictate that prices in the long term will rise for this finite resource, essentially, and that's being reflected in price recently. So, but I do expect this market, this gentle downtrend, to sort of ease off soon at around the 56 to 58 US dollar per barrel. Failing that, I don't see any reason why it couldn't retest 50 US per barrel, but in the long run, I see oil moving higher. So it's I see it doing one of two things: either bottoming out and moving into a trading range of saying between 56 to 62 US per barrel, and then taking off again, or I don't see any reason, barring some supply shock or some terrorist act. I don't see any reason why it's going to take off quickly in the near term, but I could be wrong. So one to keep an eye out for. Interestingly, another reason why oil has been in this gentle downtrend recently is that it is measured in US dollars per barrel, and the US dollar has rallied across the board, which henceforth makes oil cheaper in foreign currency terms. For example, let's take a look at the euro in US dollar terms, and the euro this is a downtrend. The market is making a series of lower highs and lower lows, and on the daily chart, this is immensely bearish. The fact that it has broken support here, and see the moment that it broke this support, it just got smashed, hammered. So and on the, let's take a look at the weekly, it's below the 200 period moving average. Interestingly, it looks like it's about to retest the 200 period moving average and might find support soon around the 114 level. So, or it could find support around here, around the 118 level. So MACD saying oversold, looks to be bottoming soon, but on the bearish side, it's still, moving averages are acting as resistance, and it's still crossed below the moving averages. So, but we can see here in the short term, the euro is in a downtrend against US dollar. Let's take a look at the pound, which usually mirrors the euro. Same thing, in a downtrend. Busted through support at 174, 173, but it looks like it's about to retest the 200 period moving average. I'd see next support coming in at this level here, which is 170 to 168. So we got a fair bit of move, fair bit of give in that at the moment. Crossed below the all moving averages and about to retest the 200 period moving average. Also, we take a look at the yen in US dollar terms, and we can see that the US dollar has rallied quite rapidly. Interesting sort of bottoming formation here against the yen. US dollar's looking quite strong there. And on the daily, that's immensely, that's like a near textbook uptrend. That's beautiful. That is a beautiful, beautiful, beautiful uptrend. Oh, these trend lines are just, I'm having all sorts of grief with them. That looks terrible. But if this pulls back, you're looking to retest at least 117. But that's a nice, lovely uptrend. It looks exactly like the recent move in the Nikkei. Mirrors it quite well. So, and also the Aussie dollar, my home currency, has been immensely bearish. On the daily, it looks terrible. It looks terrible. Key support at 73 and a half, 73.50 US cents, 74 cents, busted through. It retested the previous lows here, failed, reversed, and that's on the short-term chart. That's immensely bearish. Interestingly, MACD is giving an oversold signal, but whether we see this bottom soon, I don't know. 200 period moving average is crossed down below that, quite moving away from it. So we might see a snap back in the short term, but it's looking quite bearish on in the short term. Be looking for it to retest this high here, which it is doing now at around the 73 cent level. And then after that, the previous high of 68 US cents. So if this does give, if this level does fail, we'd be looking to retest 68 US cents for the Aussie dollar, which would be quite a move, Righty ho, that's been Chart TV for today. Hope I've imparted something useful. I look forward to seeing you in future episodes, and thanks for watching. Goodbye.